Okay, so we have started recording. So make sure that you are listening and you're paying attention to every part of this session. So we're looking at the Fibonacci studies. We're just looking at the Fibonacci studies. Let me just hide this. All right, something is blocking me. I'll just put it here. So we gave a set trade on OGPY today, based on the Fibonacci, by looking at the Fibonacci retracements, which we last covered on our previous session. All right, and on our course, we're still going to cover institutional order flow. All right, we're still going to cover that, which is a very powerful section. It's a very powerful section when it comes to forex trading, which will help most of you guys make money. Let's see. So yeah, I will touch a little bit on that. You see, even though there's a course which is based on that, a separate course, but I will touch a little bit just to make sure that your trading is very accurate. So just to ensure that. All right. So last week I gave you these values, which I would repeat again. All right. So we're looking at the sweet spots. All right. I introduced the sweet spot level. And I also introduced the optimal trade entry level, all right, which is the level whereby we take our entries, take our trade. So our trade here, our signal was given from here. Okay, let me just fix this. So we have a sell trade from here on OGPY, all right, based on this information, all right, looking at the optimal trade in the sweet spot level, all right, so we just look here. Okay, I'm pink this step, but it's better than last week. I mean on Monday, you see, I really had some difficulty with drawing my Fibonacci levels and actually doing the lesson. I don't know what was wrong with my laptop or what error happened with the charts. So we'll be having something like this here. All right. So in the markets, we will be having this type of movements, right, whereby the market will actually be pushing down to this level. And from this level here, we might see a retracement on level 50. All right. So we might see something like this that might happen. You see. So which will invite us to institutional order. That's why you have to do the institutional order calls, all right, for such reasons, all right, because the market will do a little bit of consolidation on this level here. You see, do some consolidation, then pull back, then it will enter, we'll give another sell signal here, all right, based on institutional order flow. But we will give that information soon on our institutional calls, giving you a reason why are we confident. The market you will see. You see, you can mark my words. It will turn here. Go here, all right, and here it will leave some pin or some kind of rejection candles, which will push the market downwards. All right, let me just look for a clean chart. All right, 0 odd. All right, 0 odd has been giving us a problem. We have been holding a buy trade on this pay. All right, catch GPY, we just sold. All right, and we're currently running on profits, guys. We're running a sell trade here. All right, and also on Euro NZD. All right, we sold here last week, right here in the peak. You see, and you can add more sell positions here. All right, but for short term, and the other trade we're running is OGPY. Oh, I was just talking about this one. One more is Euro Japanese yen. So it's also the same thing. All right, so same levels of my trade entry and the sweet spots. All right, so that's why we actually have our sell trade. All right, so we're currently heading down to this level here, level 50. All right, so the markets, all right, just to get on a clean chart to show you how does the market behaves in terms of the Fibonacci retracements. I'd be taking USD CAD, all right, as an example. I'm very sure most of us are very much concerned about the USD CAD. You see, it also gave me a bad trading time last week. I say, not last week. I don't know why I'm speaking too much of last week. It was Tuesday, I think. sometimes you can call yourself a good trader, but there are things that will come unexpectedly, especially like this kind of movements. You see, I was a buyer here. But, I had a buy paying order because looking at the USD, let me just analyze this for you guys. So we had the markets from here up today. So I'm analyzing using the Fibonacci retracements. You see, so I'll be pulling from this part of the swing because we had this move here, and we just go up today. Okay, sorry about that. Let me try again. All right, there it goes. All right. So we have this. So I marked from this swing, as I was showing you last week, guys. Let me just put the shapes. All right, so we have this. All right, we had a swing here and a swing here. All right, the reason I'm ready to buy here. All right, I'll be showing you why. All right, so we're seeing it in a swing here, and our level, guys, as I always tell you, it's from the estimate of my trade entry and the sweet spot. So I'll be marking this area for my buying. This way we are buying USD CAD. We're buying USD CAD on this level. This is the buying zone for the USD CAD, you see. And we are currently waiting for the market to go above level 50. All right, so I will be explaining level 50, 38.2, and level 61.8, but currently I'm looking at this level and level 50. So what we're expecting in the marketplace is for price. Okay, I don't know what just happened. All right, okay, this kind of just shot up. All right, but yeah, this is a buy zone which is being respected by the market. But what we're expecting is the market to reach somewhere here about 50. All right, it must break this moving average too. All right, which I will explain it to you guys as time goes on, and we have to look at price fading to go below 50 because currently price is failing to go above 50. You see, so that's the hindrance we're currently having on USD CAD. The market is failing to go above level 50. So we're just waiting for a break above level 50. All right, and a close above level 50. And from this close, we'll be seeing this type of movement on the CAD. You see, something like this. Something like this will be happening on the USD CAD. All right, and also looking at okay, I'll just leave the CAD here. I said I wanted to show you based on the long-term view why are we confident about the buy in the CAD. I'm sure most of you can see kind of what we have. All right, on the USD CAD. So we have this move from here to here. So I'm just putting up to this high. Okay, I don't know what's wrong with my mouse. Okay, we're from here. All right, I'm sure we can see the levels which the market is playing on. All right, so we have our optimal trade entry level here, sweet spots here. All right, and we have 16.8 here. All right, and level 50 here. I'm sure you'll notice. Okay, let me just put this on level 50. All right, I will be explaining these levels in more detail. I'll be explaining these levels in more detail, or what they mean. Yes, I'll be getting to explain them for you. See, so looking at level 50, we got two Fibonacci's. We have this long-term Fib and this short-term Fib. All right, and this short-term and the long-term Fib. I'm sure we can see this retracement turning on 61.8. All right, and we're having a double bottom. All right, on this level here. All right, so I'm sure we have a double bottom. All right, so if you can check on your notes, guys, on the forex trading patterns. All right, if we didn't receive our notes, make sure that you send us an email. All right, and we will send them to you. All right, probably it's our mistake. All right, all of you are supposed to be having notes with you. Okay, so we looking at level 50. All right, level 50, 61.8. All right, but for USD, according to our long-term view, we're expecting the market to reach here. All right, to drop up to this point. To drop up to this point, we're expecting to reach these levels. We're expecting to reach here. You see, to drop to here and then pull up. You see, so we're just currently expecting that. But let me just delete this and look at the level 50 I was just talking about. What is happening on level 50? Why is the market failing? So I'll just go back to the 4-hour time frame. We're looking at level 50. I'm sure you can see what has been happening according to our Fibonacci. All right, our Fibonacci. So we also have another 50 here based on the short-term view. So we're expecting now to pull up to this level 50 up there, represented by this red line. You see, it's touch here. And if the market fails to go back below this 50, short-term 50, we'll be looking at the market to go up. Explaining one more analysis, all right, then we continue. All right. All right, I gave a buy signal here. All right, I gave a buy signal, but it's just based on forced breakouts. All right, and institutional order, but we will see what will be happening on Euro GBP. But we're expecting it to pull to the upwards. All right, to pull upwards. All right, so looking at GBP odd, okay. Euro NZD, we're selling there, guys. We're selling the USD Japanese yen. All right, so last week, on our previous session, I gave that we might be reaching here. We might be reaching here and going up. But currently, we're expecting some bullish momentum on this pair. All right, we must go up here or head down straight to this point. Then we can start buying, because if you can just delete everything, you will see that we currently in a channel support. We're in a support here on this channel. So we have a channel support on this level here. We're expecting the market to continue going up, all right, going up towards these highs, all right, or probably, all right, probably on this situation, because we have to respect these levels, guys. So I'm just putting my Fibonacci here from down to up. So if I put from down to up, I'm looking to buy. So I'm looking to buy. Just pull it from here to here. So I'm waiting for the market to swing. Oh, okay, let me just do this. So I will just highlight for everyone to ensure that we all understanding. So I'm just looking on this. I'm just showing you how easy it is to trade. Trading is not hard. Yes, it's not hard. It's just that people are giving false information. They're taking information from the internet and showing people. You see, I will explain about that, why they give false information. You see, I will explain that. You see. But most of the false in education out there is false. You see, it's very false. You see. That's why people are hardly making it. All right. People, I'm sure you have been noticing our signals analysis. They're on point. You see, because we have the right education, forex trading education. All right. So we're looking at the swing. The market swinged down here and it's swinged up. You see, so we're looking for the market to reach down to here before it can continue buying. All right. Let me just delete this error because it will confuse us. I was just looking at the long term, what I'm expecting on the pay. All right, currently we're in this channel, you see. So we might see, from here pushing, okay. Let me set again. I'm drawing some possible movements that we might have, you see. And then from here to this area, you see, we might have something like this on the USD Japanese yen before we can have a push out of this channel. You see, before we can have the market pushing out from this channel. You see, so we can see that All right, so you can see that's going up. You see, so from here we can see we are the market pushing here to here, then probably a move up towards this area. All
So
right.
let's face off.
Yes.
Yes. I don't know, maybe it's only me, but I can no longer see the graph. I only see the top corner where it says USD JPY, sell, buy, but I don't see the whole screen.
Okay, let me just check. You can't see the whole screen.
Yes, I only see that red tab at the corner, you know.
Yeah.
I don't know whether maybe others are seeing it.
Yeah, no, I see the same, man.
Yes.
Oh yeah.
Can everyone
Yeah,
see?
I also
Yeah.
see the same. I only see the buy sell button, the one click trading button.
Yeah.
Oh, okay. Let me just see what's going on. Thanks for letting me know, guys. I will just reshare the screen. Can you see now, guys?
No.
Okay, let me just try again. Okay.
Yeah, now we can see.
All right, it's good. Maybe it was a technical problem with the app. All right, let me just fix that. All right, so I had to start again and explain what I've been explaining. All right, so let me just hide this. Okay. So we looking at USD Japanese yen, and so I was just doing an analysis for a reason for pointing out. All right, so we're looking for this kind of setup on USD Japanese yen. All right, because we have seen the markets actually moving within this channel, because we have this channel currently moving on the USD Japanese yen, and according to our trend line, all right, according to our Fibonacci, I'm sorry about that. According to our Fibonacci, we have this swing here, and we have another swing up there. All right, and currently, because based on this strategy, we look for a swing to form lower, and another swing it must form up. We have to spot those swings forming, and we'll pull the Fibonacci from the lower point to the higher point to find the next swing that will be forming anywhere around this area. You see, so the Fibonacci, as you can see, the market is actually pulling down lower. All right, so markets, and the market will only go up once it reaches this level. All right, because I'm sure we got two levels, but I haven't explained this one here, because this was also a buying level for the Fibonacci. This one here. All right, it was also a buying level, but the market has went through it. All right, so we actually heading towards the sweet spot in the optimal trade entry. All right, so we have the 30.2 level 50. All right, it's the first buying level. So the market was supposed to be buying here. All right, let me just do this. Okay, I don't know what to do with this. All right, but I'm sure you can see that area here, what the market was getting here. All right, so you can see that the market was actually supposed to, from here, it was supposed to push actually upwards. All right, so it was supposed to move higher from here. You see, but it's failed. It's failed. All right, it's failed. So I'm also going to share with you the reasons behind that. I'm going to share with the. Yes. Yes, Maris.
Okay, so Fiso. Okay, cool. So Fiso, okay, so what I can see from me, right? Chart in front of us, we can, according to you, obviously it's a buy, correct?
Yes.
Are you there?
Yes, I'm there.
Okay, so right now from the chart, it's a buy. So the buy. So I just want to come back. How do you determine a buy from there? Because on the chart, if you look at your 50 moving average right there, it's okay. Well, it is a buy according to 50 moving average. And the way I've been taught, you go to your week on that, and then obviously you look at the sorry, I don't want to confuse your analysis here, but I'm just trying to understand, how do you determine the direction?
The direction.
Correct.
Right. Let me get into that. Let me just get into that. All right. Looking at the Fibonacci directions, all right, so I will just open a small charts, a clean charts actually. Let me just go on USD CAD because I want some clean space. All right, so on USD CAD, let me just delete everything. All right, here. All right, so I just want some space to do my drawing, my rough sketch. All right, suppose here we have a Fibonacci. I'll just draw this. Just draw this. Okay, how do we determine the direction? All right. Okay. So whenever we draw from swing, maybe I'll just say here we're having this swing. Maybe the market went up. All right. Okay. We'll say the market went up to here. All right, and it swinged. I'm just showing you how we draw the Fibonacci. I will just leave it here. All right. So maybe there was no Fibonacci from the first time. All right. Maybe we're having this move currently running in the marketplace. Okay. Just this. All right. Maybe we're noticing this. So the thing we will do here in the markets, let's see, we will draw a Fibonacci. All right. Let me just insert this. All right. From the lowest level of this swing here. All right, from this lowest level to this highest level. All right, so that's why we're drawing a Fibonacci. So we'll be pulling from here to this level here. All right, so our entry levels will be here, looking at the level 50 and 30.2. All right, so we'll be looking at this zone.
Yeah.
So looking at this zone for the direction where the market will be turning. And the second level is here. Optimal trade entry and the sweet spots.
Correct.
So from here, we will be expecting the market. Okay, so once we have spotted this swing here, the market will actually do a pullback to this area here. All right, so let me just continue. It will pull back down, down to somewhere here. All right, and from here, the market might get rejected. All right, resulting in a move back above 30.2. All right, and a close above 30.2 will confirm a push up higher in price. Let's see.
Yeah. So Fisa, I'm sorry, I'm with you 100%, but Just let's go back 2 steps if you don't mind.
Go back to.
Can we just move back 2 steps? So if you go back to where the where your first blue indicator is, well, it shows a swing, correct?
Okay. Yeah.
At the bottom.
Yeah.
All right. So if you go down to there, you see from that point on, my question is from that point on, how do you know it's going to swing up or possibly just go down? I think my question is rather that. I understand about the Fibonacci and pulling it up. My difficulty seems to be understanding, well, maybe it's the trend. Obviously, it's the trend that it needs to go in, but I often read the direction wrong from where that swing is, whether it goes up or whether it's a true swing going into the different direction, or if it's not really a swing that goes down. Do you understand what I'm saying?
Yeah, I do. So you asking like in which direction do you pull the Fibonacci?
No, let me think how to rephrase it. Okay, from your first swing in the bottom, correct? That sign that you made for a swing.
Yes.
Okay, from there. Okay, according to your expectations, and I understand it's obviously your experience, we expect it to go up. Okay, so that's a skill we need to understand. How do we know it's going to go up or going to go down? What do you use to determine that it swings back up, or that the market is not going to carry on down?
Oh, okay. So, okay, in this example here, I was just making an example on how strong this. It's actually an example that I was just making, like for example, like I was just doing, like if the market went up here and turned here, you see, it's actually an example I was doing here. Notice I was saying it will push up to here and then turn to here. You get me, right?
Yes, I do.
Yeah,
I do get you.
I was just
but it's that look, we're determining. I understand you.
Okay. Now, but guys, I'm not saying, all right, that the markets will be moving like this, all right. Then yeah, I'm just making a rough example, guys. It's a rough example I'm doing.
Okay.
Yeah, it's a rough example. All right, so the market might say here, all right, according to this example, because I put a Fibonacci from this low swing and to this high swing. All right, so we must have the market swinging here. And if the market does not swing here, all right, we will have the market actually pulling lower. All right, I don't know what's wrong with my mouse. It's messing things up. All right, sometimes so maybe the market does not swing here. It will go below level 50. All right, so we must take record of the level 50 and the 8.2. And on these levels, what the market will do mostly is it will go back towards 50. To go back towards 50 and to do a retest. And if the market fails, maybe to get in back to 50, all right, we'll actually see a push lower. The market will actually push down lower to this zone. All right. So guys, what I'm saying here, yes, you're looking to buy, all right, but whenever you see this indication, it indicates a selling opportunity. All right, because no matter what will happen, if the market fails to go back above 50, it will push back to optimal trade entry. All right, then I'm just putting from here, going up. So we will be looking for such moves to happen. All right. So it might go up here, between 38.2 and 50, or if it passes this zone, then it will probably go up here. All right, so you're taking your trade here. So if you were a buyer on this level here, your stop loss should be at 61.8. All right. So I'm sure you're taking these notes, guys, on how to trade using this. So I'm sure most of you are practicing this. And I know you will not learn this in one day. Yeah, see, you will not learn this in one day. I cannot lie about that. It cannot be 1 day or 1 week. You have your SL here, stop loss. Okay, sorry about that. Your stop loss in this area, your SL. And if you are buying here, all right, let me just copy this SL, stop loss. It should be, I'm sure you can see bets. Level 0.8.
Yes.
6. All right. So we'll be looking at that as bets. So it's our second stop loss. All right. So guys, this is very accurate. You see, if you're buying here, your stop loss should be at the other side from this bet level. You see, if you are buying on this level between 50 and 30.2, it should be at this one. You see, so this is how we trade with the Fibonacci.
Yeah.
Okay.
That's clear.
Let's just look at the past example. All right, so we're just looking at how the trend goes in the marketplace. All right, but here I'm sure
you can actually see what you just said if you go.
Okay.
Sorry, my apology. I was just saying, if you go on the level 23.6 and you go all the way back, if you draw a line on your level 23.6 on the Fibo, and you draw a straight line and you look at that, I think it's at that structure on the far left of the corner, you can see it's a very good example of what you just said, because you can see where the stop loss. You can see where the stop loss, and you draw another red line at another fib at level 38.2.
Yeah.
And then you can see it's exactly what you basically just said now. Just if you just draw a red line there on 38.2.
Okay, 38.2. Let me just delete this line. Yeah.
Then it's about, okay. Then you can see your stop loss. If you've done the trade at 23.6, which you just said, and then your stop loss would have been exactly at just below 38.2. And I think it's more or less what you said. Is that correct?
Like if you enter the trade here,
yeah,
your stop loss should be at 61.8.
Okay.
Yeah, 61.8 should be at this side, because there are reasons why as I said here, right? Because here in the markets, guys, the markets can have spikes. It can have spikes, or we can call them dojis or bullish pin bars. This level, you can see false breakouts happening before the market's going up. You see, so it's very safe that we have our stop losses just behind 61.8. Like here. All right, there are reasons why I say that. Yeah, and we also have bets. All right, bets is the other level, because here we know the market will swing here. I'm sure you took the New Zealand USD where they trade. It was a sell limit. All right, we use the automatic trade entry, all right, to do our entry. So the market just charged and left a small spike. So this area is living for spikes and all the kind of movements that the markets can make. Even though we know it will be swinging here, you see, we must give some room All right, because bet is actually the last level, whereby when there's a spike in the market, it will touch this level here and then pull back. All right, so we're leaving this area for spikes. If they touch here, you see. So that's how it works. So with making entries, so using the Fibonacci.